Welcome back in YouTube. So in the public account, we just hit a new high here. As you guys can see, we are up 1.37%, almost $600 on the day. Really contributed to two different names here. That's going to be Wendy's, ticker symbol WEN, and Intel, ticker symbol INTC. I want to go over Intel really quick here. I did trim it down. As you guys can see here, we are down to 200 shares. Now, this originally was a position that I had around 350 shares that I was accumulating around $19.80. And as you can see here, we are up around $1,950 in less than a few weeks. So why am I trimming this position now? We're up a little over 31% in the last couple days. Now, me personally, with taking some profits, I'm up around 30% over the last couple days. Now, there's a lot of speculation to why the stock is going up, and maybe some of these can come to fruition. And that's why I'm holding still a decent portion here. I wouldn't say it's a lot, but I would say it's enough to realize more gains at this point in time. There's speculation that Intel could be split up and create more value to shareholders. There's speculation that Broadcom could be interested. There's speculation that TSMC could be interested. And at the end of the day, this still has to get approved if the company does merge. And that kind of scares me as of right now, because it seems like Trump does not want TSMC to even make a bid. They want them to invest in the company. And the company is not in a good state as of right now. I don't think this is a well-run company. They don't have a CEO right now, and there's still a lot of downside risk with this company. And so I'm minimizing my risk by taking some of these gains off the table. And I think there's two different ways you can look at Intel. As I stated, we were accumulating around $19 a share. You can see here that ideally it was $17.50 what we were looking for. I just didn't think it would get to those levels. When we compare it to book value, it was trading pretty depressed to book value. And then I had a future stock price of about $38 a share if they got a CEO and if they were able to kind of get their fundamentals back on track and reaccelerate growth, which is still in question. So there's a lot of me speculating here on the future of the company, of them achieving a new CEO, of them being able to become profitable once again and not burn as much capital. And so once again, a lot of speculation and a lot of assumptions in the company doing the right thing. Now, when we take it from an acquisition standpoint, I think the company could be bought anywhere between 30 to about $40 a share, but I think it probably falls in between 35 to about $40 a share. I don't know if anybody's going to pay more than that with the fact of all the things that they're dealing with. So essentially, I do think that somebody would buy them for my 2032 price target anyway, and that's if that merger would even get approved. So I decided to take some chips off the table at nearly 30% gains. I'm holding a core position, and we're going to sit back and see what happens here. I also think if a merger does not go through, or if nobody comes to the table anytime soon, we could see this thing rip back down to $19, $20, maybe $21 a share. And so I did want to lock up some of those gains in case if that happens. And in a case if we start seeing this again, if no merger comes through, then I have the opportunity to average back in a little bit cheaper. So essentially just using some risk management here for me personally. And selling some of my winners allows me to build some cash and look at some higher quality positions that I could average in that are actually selling off here. Amazon being one that I'm kind of eyeing here. Now, I don't know if it's going to dip another 10-15%, but that's ideally where I like to start getting into something like Amazon. We also know Google's been selling off as well. Over the last month, Google's down around 6%. I think this is becoming a very interesting company. Obviously, it does have some headwinds, and that's why we're seeing it sell off. So I wanted the capital on the sidelines here to possibly look at any sort of disconnects that could happen with an Amazon or maybe an Alphabet or anything else that could be presenting some opportunities. But some of my laggers today are going to be OpenText, VICI Properties, and Pfizer. You know, Pfizer just can't get out of its own way. The market really does not like Pfizer, and this one's been a tough one to hold over the last couple of years. I still believe the pipeline is going to outgrow the patent cliff. So, you know, we're holding on to this. We need to see some positivity coming over the next few months. OpenText, to be quite honest with you, is more of an end of 2025 into 2026 story. They kind of let us know that as well. And so that's why we've seen a sell-off in OpenText, but really like the setup long-term, really like the valuation, really like the return to capital, the shareholders. So a lot of things I do like about this company. It is a Canadian-based company, which is kind of in the headwinds, but it doesn't have any sort of tariffs attached to it. So that is good news as well. So the recent sell-off on this could actually present even larger buying opportunities, but pretty happy with the position I hold right now. Definitely want to up my portfolio in quality, but quality is awfully expensive right now. So waiting for those disconnects to come. And consumer staples is still having a huge problem here. We saw Conagra Brands sell off today as well. it was actually down nearly 6%. This is not a company that moves a lot, but when we look at year to date, down 13.5%, and we go over the last 5 years, down 22%. This is a company that pays a dividend, grows a dividend. The dividend's approaching nearly 6% at these levels. They're lowering 2025 sales and profit guidance and lowering full year 25 adjusted EPS from $2.45 to $2.50 down to $2.35. So basically we're looking at a forward PE sitting close to 10 times earnings. If this thing keeps selling off more, I would actually be tempted to possibly write some cash secured puts against it, collect a premium. And if I got filled, I wouldn't be that upset if we got it in maybe around $21 or $22 a share. So maybe in my next video, if this keeps selling off, we'll be looking at writing some cash secured puts against this position, collecting a premium, and maybe getting filled at those levels if it keeps selling off. So as always, guys, just wanted to update you on my thoughts on Intel, as this recent move is definitely impressive. But I think if a merger does not go through or is blocked by the administration, I think it's pulling a lot forward, and that's why I wanted to limit my risk to the downside if it does get blocked, because I do think we could see it rip right back down to the high teens and lose a lot of gains in a single day. So just wanted to share that with everybody. Hopefully everybody enjoyed, and we will see you all in the next.